Okay, welcome guys to another video. So today we'll teach you 3 steps of calculating the probability of a recession, right? So this is really a key question that you ask no matter you are investing in stocks markets or housing markets, right? So if recession comes, almost no one can survive, okay, unless you will only speculate, purchase a stock and you leave tomorrow, okay. But in a longer term, almost everyone cannot survive in the bear market, in the so-called recession, right? So the first key point I always tell my students that the key point, the first question that you ask is, now today, is it we're under expansion state or is a recession? That is the key. If not, then you will buy something or invest in something that will basically be really devastating, right? So first of all, if you're new to my channel, please subscribe to my YouTube channel and also like my Facebook page. So I will have more of the videos coming up for you guys. And in the Asian market, I have around 3,000 students and about more than almost 10 million video clicks. Okay, so you can we have 200 to 300 videos coming up about the education videos coming up. So you guys want any topics that you want me to share, you can leave me a comment below so I can answer you, including today what I'm going to share. You can also, if any questions, you can also ask in the comments below. And of course, I need your support. I need to know what you guys want to know more about the investment, because everything is in my head, inside my team, just that if I have make the video for you guys. So today this is the question about 3 steps of knowing the probability of the recession coming up. So there's a website that can help you. This is the link. It's political calculations. This website, okay. This website, most of the websites or most of the tools aren't too useful, right? But this one, I understand the what they're trying to do. I understand the logic. Basically, it's about the leading index. So you have to believe that in the investment market, many of the things are unpredictable, right? But there must be a trend. The only biggest trend in all these unpredictable situations, there's only one chance that is repeating year after year, century after century. That is bull market, bear market, bull market, and then bear market. Expansion, recession, happy and then sad, excited and then devastating. Okay, that is it. Because investment markets, after all, are composites of humans, right? Human beings, right? Human are like that. Sometimes like that. Oh, I'm the top of the world. I can do anything. I can achieve anything, right? But then another way, then we bounce to the extreme. The other extreme is that, oh, I'm really dumb. I feel stupid. I shouldn't be living in the world right now, in the earth. So let me die, something like that. So that is consists of that behavior. That is the bull market and bear market. So we have to understand from my past videos that I have uploaded for you guys, the bull market, the composite of bear market, the formula for bear market, let's say, is that there must be a bubble. All right, there must be a bubble, and the bubble is because during the bull market we are too optimistic, and even the Fed has raised the interest rate, and even we borrow money with high interest rate, and we are still really optimal. Okay, then just a catalyst, something, and something comes out, and then the bubble will burst. That is the formula of bear market. If there's no bubble, there's no bear market. That's it. Okay, so if you want to know more about that, I have few videos that I've uploaded about two about the housing market. I've talked about that, and one about interest rate cycle. That is about the bubble, and another one saying that even the US will raise the interest rate for 7 times. I think the housing market will still go up. That is another video about how to apply the interest rate and bubble in today's market. But today I don't think there's any bubble. So to this point, you really want to quit the video, right? But that is the fact. That is a fact. But let me test out using another theory to test out. So it's about the leading index. So there's this trend. One of the trend that is showing a bubble, or the bubble is going to burst, is the components of the Fed rate, how fast they're increasing their interest rate, and the second component is how confident we are to the economy, right? So the confidence will be shown in the U.S. Treasury bond or the yield curve. Okay, so that is really difficult, right? But that's gonna be really easy. If you want a difficult version, you can leave me a comment. I can leave you a difficult video version of that. I can explain in the details. But now I think most of you want to know what will happen now. Okay, it's not about the education for now, right? But if you don't want to know, you leave me a comment. So how to use it? So this calculation will help you. So now they have just 3 inputs that you have input. So you input the Fed rate, you input the 3-month Treasury bond, you input the 10-year Treasury bond. So that, with that being said, after that you after you plug in, you press calculate, and the probability of recession in coming next 12 months will show here. So I'm not too sure the formula behind, but I understand the logic behind is always the same. It's always the same. So there are many BS out there saying there's a bubble, the bubble is going to burst, but there are only a few that is about really legit. It's about the chance and how many times it had happened. So for this theory, this leading index and bond yield curve theory is not almost, in the past 60 years of US economy, every time it had recession, is 100% of the time will show that this signal will be shown. This signal will lit up. Okay, so this is really legit. So first step, you have to calculate the Fed, you have to know the Fed rate, right? So now is, let's say, in May or in June, if they will raise the interest rate again. Let's say it's 1. So that's a bit more pessimistic, a bit more safe to say it's 1, right? So if the Fed rate is too high, but the Treasury bond, the bond yield is not high enough, the confidence is not high enough, when they the two lines are being diverging, okay, divergence, okay, it's diverged, okay, that is the time the recession comes. Okay, you know what I mean. Okay, so that is, and the other signal is you can type in US 10-year yield curve. You can choose other websites, but that is legit also. 2.3. Okay, then you should find the 3 months yield curve, 3 months Treasury, like that, and then of course you can find the also you can come to CNBC because you want to be consistent, right? So 0.815. All right. So for me, I won't necessarily choose the 3 month. I would choose the 5-year and then 10-year. Okay, but that's basically work about the same. So the bigger picture is the same. But in the shorter term, I can, if you want to know more, I will prove you that why you should do 10 years and 5 years, especially 5 years. Anyway, but before that, you know this calculation, you could do that. So now you know that the 10-year and 3 months is almost the same as the Fed rate, or even higher, right? So if you calculate in the recession, the probability of recession in the next 12 months should be really, really low, because the confidence is way above the minimal interest rate, which is the Fed rate. Okay, so let's press calculate. So there's a 0.2%, it's not 20%, it's 0.2% chance it will have recession, which is really, really low. Okay, so if you have planned all your strategies according to that, only that piece of 0.2% of the strategy, what will happen, right? You lose all the opportunity cost. That's it. So you can play around with this number. Let's say 3-month Treasury is really suddenly going up really high. So let's see, it's become higher, right? So you can play around with the number. Let's say I'll keep it the same, but the Fed rate is going to raise interest rate really quickly. Let's say to 4. See, the chance is going to 5.4%. So last video I talked about even the Fed going to raise interest rate to 3%. I still don't think that's a bubble, but I will start to concern. But no, now Not at all. So if that's your first house or you want to invest, do it now. Okay, do it now for a long term. It's not speculation, right? So if you buy some stock now and then you exit tomorrow, if you lost money, that's not the problem. That's not key. It's the key of the, if we are going into the last phase of the bull cycle, what should we do to capture the last chance to capture the wealth? Okay, it's not speculating. It's not a quick money. I mean, for a portfolio to gain like 50 to 100% of the last 1 to 3 years of the bull cycle, because the bubble is not here. When a bubble is not here, it's bull cycle. When a bubble is here and burst, that's recession. Then you don't buy anything. So maybe 2 to 3 years, all of my scripts and all my direction will be completely opposite. Okay, that's fact, because I'm looking at the data. I'm not looking at myself. The market is not about how much purchasing power I have. How old I am. It's never about that. You should think of the market first, and then how you should customize your strategy. Okay, so let's say the recession or the 10-year bond is lower, like that, 0.4, let's say. So now it's different, right? Just before the first case. Nowadays, just the first case is today's example, right? So the Fed rate, and then it's like that Fed rate 3 months and then 10 year. That's really good. So now it's opposite. It's one lower than the other. So we press calculate. It's 43% chance that we will become recession. So remember, when the day comes, the probability will not go to 100%. Okay, so it's about 40 or 50 or 60% is really high already. So when this day comes, the Fed rate is going to raise interest rate, and suddenly the interest rate is high enough that you can go bankrupt. The whole world will go bankrupt, and also suddenly the confidence is really to the extremely low level that will make the bubble burst. That's it. Okay, you understand what I mean? So if you want to understand the detail or difficult stuff, you can leave me a comment. I can leave you a video, something like that, so you will understand more about the logics behind. But now, just 3 steps everyone can do to calculate the chance of recession. So better plan your life, your housing, your quality, your saving, your investment, because you have to work. We have to work our butt off for our next 10 years. It's not just waiting here and the money will come, right? So we have to, someone has to do something. Something has to be right for you, for us to enjoy the life in the next 10 years or 5 years term, of depends on what you want in the next 10 years. So with that being said, until next time, please subscribe if you haven't done so already, and please like my Facebook page, and please leave me some comments and show me some love below. I'll see you next time. Goodbye.